Hey guys, Boris, welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for Feb 20th through Feb 24th, 2017. And I think the interesting story here is that the COM dollars continue to be the very low volatility trade in the market. They're really moving very, very slowly, as the rest of the market is, but they're even super more compressed in terms of volatility than the rest of the market. This week, ironically enough, I think we have more data on the COM dollar side than we have on an even major side. There's New Zealand PPI as we start the week. There is Canadian wholesale sales. We have monetary policy meetings. We have the dairy auction again in New Zealand, which will be interesting to see because I think it actually performed quite well the last 3 or 4 times. Governor Lowe speaking, and that'll be interesting to see if he sets the tone for the RBA in any way, shape, or form. And then retail sales. We have PCE, which is a very important data set out of Australia. Private capital expenditure expected to be better than the month prior, but still negative. Retail sales out of Canada, and then finishing up again with CPI out of Canada, and more Governor Lowe conversation on Thursday. So if you sort of look at event risk, there is much greater event risk on the side of COM dollars, but none of it seriously market moving. It'll be interesting to see if any of it has any general impact on the trade. For now, though, the commodity dollars really remain very, very compressed. And what's to show you just how compressed they are, literally nothing has changed. This is one of those weeks where the resistance and supports are the same last week as they are this week as we go forward. And we can take a look at the charts here and just kind of see just how quiet everything is. So here's Aussie. Aussie basically traveled, 80, 90 pips one way or the other most of the time. We had a burst above the 77s on the unemployment data, then came right back down and sort of trading a little bit lower. A lot of the trade in the commodity dollars now is really taking shape against the carry trade in the U.S. Basically, U.S. yields are driving most of the flows in and out. And since the yields are relatively steady, so is the trade in the Aussie dollars. On a technical side, though, the thing of note to watch here is this is a quadruple top in the Aussie. 77 was certainly, even for the short term, a very high probability sell. The question, though, is, is fifth time the charm? Again, Australia to me right now becomes a prove me. I forget what the state is. Oops, sorry. I'm going to get rid of these messages just for a second. I forget what the I think it's Missouri in America, called the Show Me State, and I think this is pretty much the attitude that we have to have in looking at the trade in the Aussie dollar to the upside. We really needed to come up and trade 77, 40, 50. Like, we basically needed to take out the highs in order to really believe that the uptrend could continue, perhaps towards the 80-cent level. The stall over here is very suggestive of the fact that we're probably going to likely roll over a little bit, certainly consolidate down to the 7,600 level. So I would not be a buyer at any of these levels, because these are very low probability levels to make it happen. Maybe you could buy at 76 here on a bounce back up. The true support really comes in at 75. That's a much better support because it's former support versus resistance. But that's quite a long way away, and it'll be interesting to see if we could even get that kind of a move, given the very low volatility environment that we've had in the COM dollars so far. So COM dollars are just basically sort of staying in place, doing nothing much. Dollar CAD also very, very quiet, uncharacteristically quiet, because given the volatility of Canada, it's surprising. We do have a lot of Canadian data this week. CPI, the retail sales. We're interesting to see if any of it has a major impact. So far, this 130 level has just been rock solid. Has not been able to break below it, which suggests that dollar yields still basically playing positive towards the U.S. dollar versus the Canadian dollar for the time being. But I think one of the more interesting things we talked about is, if dollar yen is the primary proxy for dollar strength, dollar Canada is the secondary proxy. So to me, what's interesting here is certainly dollar yen is what we're going to be looking at to see just how strong the dollar is, period. If it starts to roll over in dollar yen, then it definitely suggests that there's further dollar weakness to be had. And the confirmation of that further dollar weakness will be a break of the 130 in dollar CAD. If we get that, that would suggest that there's a lot more dollar weakness than we can possibly think at this point. And lastly, Kiwi dollar, Not much on the news front again. Kiwi dollar really likely going to find some serious support here at the 71 level. 73 was just, as you can see on the charts, a very easy short given the fact that this was a big resistance level multiple times over the last several months. For now, still very quiet consolidation. 71 definitely needs to hold to maintain the very healthy recovery that we've had since was it beginning of end of December. So we've had a couple of months worth of very strong upward moves in the Kiwi dollar on the trade. At this point, still looks very constructive and very positive. And I think, here's a trade that's probably coming in close to its value proposition level. So I would be a buyer here with a stop at 70.50, because if that breaks down below that, clearly the trade is wrong. But for the time being, if you're gonna dip on a bargain hunting place, probably the Kiwi dollar will be your best bet to make. Wish you guys the best of luck, the best of trading. Boris, over and out.